The broadcast is now starting. All attendees are in listen-only mode.
Good Black Tuesday, Warriors. And you know what I mean. S&P's down 37. Challenge this low. I was looking for the other outcome first. So missed it. But better to miss something than to be the wrong way. Okay, so NASDAQ still holding up the best. Its low was 880. I know it because 920 was my target. So we'll see. So we're getting a little bit of a flight to the precious metals, which, I've been saying mission wasn't accomplished there, that we're headed up into the mid 1240s. So not too far away. So if you're a bear in gold, this is what you're looking for to eventually, even though it's cracking this 200 moving average, eventually in this range here, looking for a top and then a new low to take out 1160. That's what the bears are looking for. Bulls are probably thinking 1280 here. So silver is keeping pace, but when you think about it, silver is finally getting back to this high right here. 1485. That was a month ago while gold was surging. So $15 looks really doable. If things really accelerate, maybe even 16. So that's where some of the flight capital is going to. The bond market, it's not open yet. Let's see if we're getting any indication in yields. Yeah, they're down 5 bips, the 10-year. Okay, maybe ABC. And the end's getting hammered here as well. So, we're talking about a move up towards 113 to short the yen. It didn't quite get there. That's a pretty ugly day in the yen. We just rallied a little bit more than 38% here. Should be on our way down. I really don't see. The only thing I did that was new this morning when I got up, and actually it's a weak sister because the pound's outperforming, was buy the euro on this candle here. Right here. So if we could crack this 85.90 level, I think we're going back towards 15.20. And then if the dollar really gets going, and look at this, dollar does look kind of heavy here, doesn't it? The spike last night didn't confirm. So perhaps we're heading back down towards this 95.40 level. And then we break that. This time, maybe it matters. It didn't matter this day. That would take you down to 480. And maybe eventually we're still heading here in the dollar. 92.90, 93. Okay, what else do I really want to comment on? That's where all the action is. Crude, new lows, I believe. Yeah, non-confirmation here at 68. I wouldn't short it here anymore. I mean, it's down also in sympathy with the stock markets. Asia got killed. I'm not sure what the catalyst was, but the slaughter began last evening during the Atlanta Falcon game. Already forgot. Cincinnati. No, I forgot who they were even playing. Anyway, VIX.
Oh my God, I forgot too.
Who'd they play?
Giants.
Oh yeah, they're forgettable.
Yes, they are. They're not as bad as the being Cardinals forgettable.
Oh my God, I know. I'm sorry.
Sorry, let's not talk football. I'll go. I'll be right back.
Okay. All right. So So the dollar, I don't think you're late trying something here. You know, what's interesting about the dollar is they took all the dollar bulls out on this false breakout. And even if they didn't believe the breakout, they got squeezed. And, you know, what was made me nervous about being a bear up here is this high right here is 09, and this high here is 16. So we never took it out. And this time, the high was same high, 16. They didn't elect the stops on this. Anyway, pretty good divergence. This looks pretty ugly. So I think dollar shorts are warranted. As far as turnaround Tuesday, what to look for a reversal in, I guess you could call, you know, if you get a turn in euro here, because we actually almost retested the double bottom. Seems like the algos aren't doing their job lately. They're not going for stops under lows, but we cracked this 87 level in the euro, and we should fly to the 15 handle easy. And we get through here. Actually, 1.618 of this is 270. That would take you up to 117, right? Would take you up towards here. So this could be just beginning. Risk reward's pretty tight. You could even use last night's low to take yourself out. It's not a big risk, really, when you're talking about trading FX. I got some off at 57, but even here at 78, it's only a 40 pip risk. Let's see what's happening here with the team. Okay, so I didn't look at this in advance, so, you know, I'm going to be completely transparent. Okay, Blaker got long gold. He's looking for much higher numbers. Okay. Steve is bearish, making money short yen. Andre has a Gartley and CAD. It's a BE. So actually, the team's been pretty active. Steve sees the head and shoulders. Steve has been getting more active on the pips. Okay, he's got a trade going on the long side of Aussie Kiwi. Andre's got a Dixie. He's bearish. I hope he's right. I don't think it took a stop out. He's still alive. And there's a Wizard of Waves. Grega up 1% on a bullish Canada trade. And wow, look at Grega really got long gold well. You know, 1190-ish, 1193. He has even higher targets than Blake, 1300. So where can you find a team? Okay, let's see. Elliott Wave, Harmonics, Candlesticks from Steve, Conventional, Blaker, Basic Technical, all these different methodologies. What a nice site, and what a great team. So are you ready now, Blake?
Yeah, I'm here. I'm here.
Yeah.
How's it going?
It's going okay.
You sound a little tired today.
I am a little bit.
Yeah, I know that happens.
You're almost. You'll have a bonus hour in 2 weeks.
Oh my gosh, I'm so happy! It's my best 5 months out of the year. I mean, it's football season. I get up an hour later. It's Christmas. Celebrate Christmas. It's Thanksgiving. It's
snowflakes. Pips are.
Well, it's below 80 degrees here. It's awesome. You know, it's my favorite time of the year. Anyway, yes, we've been pretty active. Matter of fact, I closed out all of our patterns in play. Well, not all of our patterns in play. I closed out 2 of my patterns in play today. In the Kiwi and the Canadian yen, just because I thought the markets were going to, try to find some support ahead of this really good support in the S&P. Yeah, and I don't know if I'm going to be right. And let me show you what I'm talking about.
Nice work.
Thanks. It's just I probably should have let him play out a little bit more.
Coulda, coulda, woulda.
Yeah. Well, here's the S&P. So this is what we have to. This is really critical. So as you guys know, well, maybe you don't know. If you use ForexAnalytix, you know we broke out of this triangle here, consolidation. And I one of the guys from my office yesterday, he asked, hey, well, in this consolidation, we were at the top. So he's like,
Yeah.
well, you know, we were here yesterday. Yeah, we were right here, right? Something like that. And he's like, so what do you think is going to happen here? I'm like, well, typically, you know, when you have a triangle consolidation, it's going to follow the direction of the predominant trend, current trend, which is lower, because we've been moving lower for the last couple of weeks. So we should break lower, and we did. But the problem with where we're at right now is that this is trend low. So you can see the trend low here. Okay. That's the trend low, and we're basically matching the trend low. But more importantly is this multi-year, I want to say multi-year, but it's actually, yeah, I guess December 2016. So yeah, you know, all 17, all of 18. So a multi-year trend line comes into play right at these trend lows, and basically at the 618 retracement, which comes in just below 2,700. That means this is going to be not where this dotted line is, but really this is where, you know, the rubber meets the road. This is where the market gets really bearish, is a break below 2,700 or 2,685. And that's where the proverbial wheels fall off the bus, if you will. And, you know, the market's trading heavy. It's trading really heavy. And remember, you got to think defensively as an institution. You know, you've made I'm just going to extend out for a while on the S&P. So, I mean, you go back from the financial crisis lows to the highs. You're doing great over the last several years. Unfortunately, this year, beginning of 2018 to where we are right now, you know, you're talking about the market is down. Okay, so let's go from, you know, January. Well, actually, this is to be January 1st, right? Somewhere around here. So the market's actually now break even on the year, but as a you know, something like this, like right around here, you know, we're about break even on the year, but most funds are trailing the S&P right now. So if you know the S&P goes negative and you're already down like 6% on the year, what's that mean for redemptions for you next year? So the market participants can't risk anymore. They're playing defensively. So what does that mean? That means that they have to like do something to be defensive. Where do you park your money? Where do you make your money? And you know, where do you turn? Well, most institutions are going to go, okay, I'm going to buy some yen, and then you got the yen that is actually starting to strengthen. Okay, you got Steve pointed out a pennant. Well, look, if this pennant plays out, let's just do the technicals here.
You sound a little tired too. You know what, Blake? I do believe this. There is no redemption for money managers. They're only as good as your last quarter.
Well,
there might be redemptions from them, but there is no redemption. You're only as good as your last quarter.
Well, there's redemption from them, and that's the thing they worry most about. But if you look at where this pennant can go, I mean, we can retest 110 from a measured move standpoint. Okay, so if the dollar yen breaks, and I have to point out the same uptrend that and this goes back to our blog. I mean, let me go find our blog. And by the way, just so you guys know, I'm going to let you know today, right now, our blog is going to become more active starting next week. You're going to start to see something new every single day. So it may not be a big blog post, but you'll be able to read something new for those of you that aren't subscribers. So
without wanting to interrupt your train of thought, once you saw the blog, I know. You can, since you are at our site, you can then show the new webinar page once you finish.
Okay,
showing the blog.
will do.
Okay.
All right. So this is the blog going back to, S&P, yen, false breakout in the yen, the bond market, and matter of fact, I got to pull up the 10-year right now. The 10-year yields are breaking down, and the 10-year looks like it's about ready to rip higher. Hold on, here's the 10-year. I know it's delayed, but look, we're pushing previous low from back in May of 2018. But in the blog post, we outline all of this, transpiring and taking place over the last couple of weeks. So you guys really should be looking at the blog post. Now, Steve says, on our website you can see the webinar page, but I don't see it. Where is it?
Can you refresh? Actually, click on home.
Refresh, because if you were on if you had the site open, the changes haven't taken effect after uploading it to the server.
Let's see. Oh, there it is. Yeah, there we go. All right, so this is our new. Thank you, guys. This is our new webinar page, right on our website. So you have all the playlists, interviews, and these are the upcoming schedule interviews, and this is about our videos and our shows. So these are all the latest uploads, and you'll be able to, if you miss anything that I'd hate for you to miss anything that Dale has to say. You can come right here and listen to it all at once, and you can, this is it. So we have it all here, all the European crossovers, all the face webinars, the previews, the recordings, all the interviews. These are the upcoming schedule interviews of traders that are coming up. So you can plan your schedule. So these are all the things that we do, as a company, and we continue to, work on things and make things better and easier for you to use. And hope you're enjoying, the new features that we have added. I know Steve and the development team has worked really hard in that. So hopefully you guys all really enjoy that, especially, going here and looking at the scheduled interviews that are coming up. This is pretty cool stuff. And I know the guys have worked really hard on it. Anyway, and if you have any comments or questions or concerns, make sure that you bring them up to us. All right. Let's see. Dina says, would you guys be able to suggest a best play for the day each morning from your expertise and analysis? Well, you know what? If you're a ForexAnalytix subscriber, you have new patterns in play that pop up every day, and you have this wonderful chat room of traders chatting all day long, all morning or all day. I mean, this all day. Myself, I haven't even talked here since way back here, which was less than an hour ago. But you can see, I mean, we just chat all day long, and there's 100 of us in there, and a lot of great ideas. And then in the blog post, there will be a chart of the day. So that is something that is upcoming, and that's something that you're going to see every single day. But why not just be part of the community, Dina? How about that? All right. What was I going over? I was going over something. Oh, I was going over equities. And so with the equity markets where they're at, let's go back over to the S&P. So you have the S&P. It's coming into really, really critical support. You have the dollar yen. It's obviously coming into really key support, the trend line that comes in around 112. Bulls are on guard today. And then I wanted to mention, I just got long gold personally, but look at gold. Gold, we had this pennant breakout. We joke around in the chat room. So there's this dude, and I don't tell you who he is, but he is my favorite fade. For years, he's like the one dude that, you know, I've kind of coveted him, and I don't tell anybody who he is. Some people have figured it out that are in our chat room. This guy, he's just the ultimate fade in the world. And yesterday he's like, gold's bearish, blah, blah, blah. And I'm like, man, we got to get long gold. And that was when we were down at the triangle bottom here. And I didn't. And I got up this morning and I'm like, damn it, I missed the triangle breakout. I mean, I got long, at 1235 or wherever. We're at 1238 and we're making our way higher. And I think we're going up to 1270 now, because that's where the pennant, points. But I was like, I cannot believe I missed that move yesterday. And the thing about gold is we're pushing the previous support, which is now current resistance, which we're above. And if gold continues to press higher or keep a bid, that means the dollar yen probably isn't going to bounce much. That means, the dollar yen is probably going to stay under pressure as long as gold, retains a bid above 1230. And that's all I care about today, is I just want to make sure gold stays above 1230. If it stays above 1230, more importantly, I'd like to see it above like 1240, obviously. Because if I'm long gold and I am short some dollar yen from 27 or 29 or something, 2780, actually, it's 112.2780 is my position. Anyway, as long as gold stays above 1240 or above 1230, excuse me, and gets above 1240, that means the dollar yen is probably going to stay under pressure. So I like this move higher. Now, if the dollar yen stays under pressure, that means that the S&P is probably not going to bounce much. I think it was Hassan in our chat room. He said, I bet they bounce equities, at the open, which they always do. I mean, it's just like, it's inevitable. As soon as North American traders step in, they don't know any other different. They don't know any better. They just know, oh, I got to buy. As soon as the market opens, if we're down, we buy. And that's just kind of the until you change that mentality through behavior, that we're going to continue to the market's going to continue to buy dips until it starts to hurt. Remember, well, for those of you that have listened to me for years, I always use the old come on, donkey, take the carrot, donkey. Come on, just take it. And then, you got the donkey with the, over the edge with the carrot, and it just doesn't care. It just, it's how they used to get donkeys to go up and down hills in the Grand Canyon, for example, because they dangle the carrot in front of the donkey to keep the donkey moving forward. Well, in the stock market, you have, the whole trading desk and generations of just buy, we only buy until they realize that every time they buy, they step off a ledge. It's behavioral. So you got to let that, it takes a while to change that. So I assume the market's probably going to, be bought right at the open. It's going to be interesting when that behavior changes, because I do believe that we're on the cusp of that. We might be over the next couple months starting to see, gap ups and then people just selling into gaps, But right now the market's gap down. So the people are going to, just automatically come in and try to buy the market. But so I don't know if we're going to break down yet, but I would assume that we bounce a little bit in the S&P first before we try to make a stab at this trend line here. And that means the dollar yen probably bounces back to like 112.40, 112.50, and gold might pull back a little bit to 12.35. I think that's all possible right at the open, because we don't have any data today. I don't think, nothing too big. We got Carney speaking later this morning. We have Richmond Manufacturing Index coming in, which probably is going to come in, maybe even a little weaker than expectations here. But overall, I think the markets are very vulnerable, and I think that the traders are probably on guard. Now the question is, as an FX trader, what do we do? What do we do with some of these majors? And I'll tell you what, I think the euro's got a nice bearish wedge here developing. 114.30 is pretty key support. Any rally above 115 is probably going to find some sellers. The cable just rallied right up to its downtrend line following the news about that the EU might be a little bit lax on some of the border issues, and but the cable just rallied right up into resistance and stalling. The Aussie's still trading really heavy. There's no reason, zero. And I know I mentioned this yesterday, and is today Tuesday? It is Tuesday. Jeez, I guess just yesterday. I know I mentioned yesterday. Well, while we're below this resistance, that we just continue to remain bearish. Kiwi, big rejection at 66 cents. I shorted it, and I covered it yesterday. And right around these prices, and I closed the pattern in play for now, but I think any rally in the Kiwi is a short. The dollar Canadian, as long as we hold above this 130.75, the risk is that we move higher, but Bank of Canada is tomorrow. So, for us to get any forceful move out of here is going to have to be some change in rhetoric from, the Bank of Canada, in my opinion. Let's see here. The dollar peso, this thing looks really strong. I know I talked about it yesterday, and we rallied from 1920 to 1940. I still think that if you ask me, the dollar peso is going to do this. We're going to 20 eventually. Not saying that I want to necessarily buy it right at this moment in time, but I think we are. Wait, hold on. Conti says a 2.4% deficit for 2019 is ceiling. Rules out Plan B on budget. All right, so he's sticking to his guns, but I don't know if the market's going to really. People like, blah blah. The euro's coming under a little bit of pressure here. Conti says he cannot accept changes to the substance of the budget. Conti talks of Ital exit as fueled spread widening. Because of potential of Italy leaving the EU has fueled the spread widening. Maybe it has, but the fact of the matter is, I think people are just worried that Italy is not going to be able to live up to its expectations. So you can make gold. Like I can sit here all day long, and I can tell you, this is very true. Actually, I can say, I'm 20 pounds overweight. I'm going to lose 20 pounds in the next quarter. I've been saying that for 4 quarters. I haven't lost anything. I haven't lost squat. So there's that. Right, Steve?
Oh, yeah.
Yeah. So, Italy can say all they want, like, oh, yeah, we're going to stay at 2.4%, and, blah, blah, blah.
It's all about actions that speak louder than words, right, buddy?
It is, of course.
Like Trump would reduce the deficit.
Yeah. Well, it really is. It's just all talk. Let's see what Italy's made of. But I don't know if the market's buying it, and you can see the euro's under a little bit of pressure. So,
well, the thing is, Blake, and good morning, everybody. The thing is that the Italians are actually unanimous in what they're saying for the moment. So, Prime Minister Conte just said that. Salvini, the Deputy Prime Minister, said earlier today that they will listen to everybody over the budget, but they won't turn back, which was a very funny comment, I thought, And he said the only institution that can improve the budget is the Italian parliament. So basically they're saying, you can say whatever the hell you want, we will do what we think we need to do. And, we've said this before, Italy is not Greece. They're much bigger. The debt is huge. So, will they do an about turn like the Greeks did? I think they have a lot more ammunition than Greece had.
Yeah, that's true. But depends on how much the market pressures them, Stelio.
Of course.
As long as the market, it's all about the spreads. If the spreads start getting out of control, they will have no alternative, as many others before them didn't have.
That is true. But let's see how it goes. It's really interesting. This, I look at it sometimes.
If you're asking me to make an assumption, if I believe that the spreads are going to go out of control just because of them wanting to stick to a 2.4% deficit, I believe no. I don't believe that that the spreads will go out of control for that. But if it happens and it coincides with other things happening at the same time, that might like increased jitters, it will contribute. That's what I think about it.
Well, guys, Steve, great call on the dollar yen. I think we're going to probe the 112 today, if not break it. Stelios, you're a forever bull in silver, and I think you're going to be right for a little while. So good job. And I want to wish you guys all a great day, but make sure you visit our sponsors. That's Forest Park FX, and yep. And they are they're great people to talk to, especially if you want to get ForexAnalytix for free. Join our reimbursement program. You have to do it through them, and they can assist you with that. So thanks for listening in to me, and I'm going to turn it over to my colleagues. Thanks, guys.
Thank you, Blake. Thank you.
Good luck.
And keep in mind, there's also Skype contact here. You can actually speak live with any of the guys there. They're extremely, extremely helpful, and Dale can attest to that. Extremely knowledgeable. That's why we have them like once in a while here for an interview. And every time we have Trent or Justin, we have a lot of people, Dale, that have actually questions having to do with brokers and how things work. And I think that those are questions, legitimate questions that every trader wants to know the answers to. And obviously, there is absolutely no trader that doesn't want to be at the best broker for their trading style and their account size. Right, Dale?
Yeah, definitely. Trent is a great resource. He knows everybody. So, he knows brokers overseas. Here in the U.S., it doesn't take a lot to know every broker here. But and one thing, he's not going to steer you to a place where your funds are going to be in jeopardy. His mantra is regulated return of capital, more important than return on capital. So
absolutely,
and he won't bump steer you.
Yeah, and they have something in common with us. Initially, I won't lie to you, I was very skeptical about working with an introductory broker, but after we got to meet them and we saw their work and business ethics, because we would never want to steer our clients to any kind of service that we're not 100% sure that delivers the same kind of quality. But once we got to know them and saw their business ethics, we had no hesitations afterwards. Anyhow, let's go to the charts, because yesterday I had so many things to cover, and I know that I left over questions and things that we never actually managed to cover, but today I'm going to make up for that.
Can you start with gold, Steve? Are you covering in here? We're still about $6 away from your target. Right?
No. I already have closed my second third, and now there's 1/3 left, for which my target, as you see, is a little bit optimistic. It's at 1262, right? So I'm keeping the other third. I remind you that my position was from 1199, so I'm quite deep in the money, and why not?
Great, buddy.
Thank you. And I'm also still holding, because that's one of the questions that I didn't cover yesterday. I'm still holding 1/3 of my crude short as well. That's why it's also useful being in the chat room, because I did make a pattern in play that had a target at 70. But I let people know that I always like to scale out. So in the chat room I let people know how I scale out. So people know that I'm still holding 1/3 of my position. Specifically yesterday, I made a specific mention in the chat room saying that this retest of the 70 area that seems to be failing is a very good sign for the bears. So I still feel good about more downside coming, and I'm still very comfortable holding. I mean, I'm short from just below 72, so I'm still holding, and I believe that we can easily now come down and test this 66 and a half level. So you said, Dale, yourself, that I'm now more active in the markets. It's because you know very well that I'm very, very one of my basic rules is that when you have volatility, you have clarity in the markets, and that is the timing for you to press on the gas, to push on the to put the pedal to the metal, right? I mean, when things are choppy and slow, I would rather sit on my hands and do nothing and have a month that I have no P&L at all, than just, strive with the markets and, hope that something is going to work out. On the other hand, when the market conditions, tell you that, okay, this is the time, for you to be involved, I have no problem being involved in multiple positions at the same time.
When you were a bachelor, did you have more than one girlfriend at a time? Did you date
actually,
several women?
I can answer that. Yes.
Actually,
because we know there could be
yes.
we know there could be a lot of volatility in a situation like that.
Actually, I'm guilty as charged. I've done that. I've done that. I've done that, but since I've been with my wife in 2004, something, I really enjoyed my life between 1997 and 2004. Besides, because I'm against, on a personal perspective, I'm against substances and being out of control. But I was really a party animal, while I was like as a, in university, etc. So I partied a lot. I had fun with girls a lot, and at some point in 2004, I just, put myself in a sabbatical for something. It was like something like 4 or 5 months because I wanted to quiet down. And then I got to be with my wife, and I'm, with her since ever. And to be honest, I've never looked back again.
Steve, it's okay. She's not listening. Okay, so don't worry. Carry on.
No, Stelios, that's the truth, actually.
Yeah. Okay. Let's go to the charts.
Only Stelios knows.
No, my friends actually do.
He knows.
Yes.
We'll talk about it on Skype later.
I have nothing, I'm not disclosing, honestly.
Methinks thou protest too much.
Okay. So I also remind you that I'm still holding, and that I'm, I know it sounds a little bit ungrateful, but I'm a little bit pissed because I'm holding, if you remember, 1/3, of a short position from 28.14. If you remember, I said that, I just want to have exposure in the market again, but I honestly believe that I would get the opportunity to add to that position so I can get back again to a full position higher. Unfortunately, we're now like almost 100 handles lower, and I just have that 1/3 of a position. And I really don't know what to do with it, because on one hand, I'm like, okay, this is 100 handles, even if it's 1/3 of a position, book it. On the other hand, it didn't play out as I wanted. I really hoped for more consolidation or, a rebound towards 28.50, 28.70. But as Blake said, and we had this discussion earlier today in the chat room, I do believe that there's a big chance that when the US market opens, we're going to see an attempt any moment now, we're going to see an attempt to buy the indexes. But I will be very closely watching the S&P, because if it fails anywhere at 27.45, in my opinion, it's game over. I mean, if the bidders don't manage to push the market above 27.45, it's game over. We're going a lot lower, I believe, a lot lower. Now, having to do with the USD yen, what I was seeing, and that's what I posted earlier today, is this. You can see it here on a 4-hour chart. I think that we have a very clear move lower. We have a very clearly corrective move higher. So I do believe that at the very least, we should see a retest of this 111.62, whatever the low was. And time for us to speak about the metals, because that's one of the things that we didn't cover yesterday. And, gold breaking out from the triangle, we already talked about it. I'm still holding a position here. Silver, I'm watching this trend line, actually, which we're currently testing as resistance. So I do think that silver is still somewhat left behind. You can even see a potential like inverted head and shoulders formation, or although this would not be my favorite interpretation because we're not at the bottom. So, I wouldn't be viewing it like this. But I can tell you one thing for sure is that if we close above this trend line, at the very least, we're going to hit what was my initial target. When we started having a rebound, I said that I think that we should see silver at least retest the 15-20 area. So I do think that the 15-20 area has a good chance of getting retested. Now, I warned yesterday without even showing the chart because the time had already expired. But that when I said that, we were exactly here where I'm showing, let me mark it. We were exactly here, and I said that sorry that I don't have time to cover the metals. We were exactly here. But keep in mind two things, that copper is making an attempt to break out, and what is definitely breaking out is palladium from a flat top triangle. And you see where palladium is now, right? Palladium is freaking unstoppable. Unstoppable. I mean, this was a very bullish formation.
It's all-time highs now, Steve. All-time highs.
Yeah. Just look at this. It's completely parabolic, right? Completely parabolic. And I said a long time ago that given this kind of a move that we saw higher, its momentum and its speed, I was more than certain that this move lower that I'm drawing now was corrected. The only stupid problem with palladium is that I kept waiting for a little pullback to align myself with the trend, and we never got one. I mean, this strength is unbelievable. Every single time palladium stalled, it just did that. It just stalled for a little bit. It didn't even, really pull back, and it kept going higher. I mean, this is unstoppable momentum. So, I wanted so much to buy it, but the risk reward was not there because we never got like a decent pullback. So it is what it is, as you said, Stelio. At new all-time highs, soon enough, palladium is going to be worth more than gold, right? It's already worth more than platinum. It's soon going to be worth more than gold if it goes on like that. So it is what it is. I mean, it's an unstoppable trend. Of course, as I was saying yesterday, because I also said that, keep in mind, be very careful, because this push higher might be the last push before a bigger corrective move, because really this is a very strong move. This might be a fifth wave. So I would expect that sooner or later we should have some kind of a bigger pullback, because nothing moves in a straight line for too long, and palladium has already done that for a decent amount of time. So this is the reason why I decided not to buy the move yesterday. Judging from the result, of course, I'm regretting it, but judging from a point of view of a specific way of seeing things, I'm not regretting it, because that's what I thought it's the correct thing to do. And by following the plan, sometimes it goes as you expect, sometimes it doesn't. But I don't want to change my trading methods just because palladium exploded higher in more of a impulsive fashion than I would have expected. So it is what it is. So let me go back to copper, though, because I also said yesterday that there is a decent chance that copper is breaking out, because we were doing this move. As you see, we have a very long upper wick. This is one of the reasons why I very rarely trust moves until I see a daily close, if I want to be involved with them for more than a few hours. So yesterday copper was looking like it was finally breaking out from this channel, but obviously the way it closed on the daily is a very bearish close. So that kept us within this channel, which means that there is no event yet for copper. There will be an event if we actually do close below 272. That's going to be a bearish event. Until that happens, there's still the potential that we're going to break out and rally once more towards 294, in which case I think that's going to be a wonderful area to be short. Until that happens, I have a neutral bias in copper as long as we stay trapped within this channel. As I said, yesterday's attempt of a breakout was obviously a spectacular failure by the end of the day. And let me also point to platinum. Platinum is moving higher, but definitely just compare the way that platinum, let's say, is recovering with the way palladium is recovering, or even with the way Gold is rebounding, right? It's more than obvious that platinum, despite being in a corrective mode, remains very weak in comparison to the other metals. So I think that once the other metals like gold and silver start moving lower again, platinum has a very big chance of underperforming them once again. Let me also just point out that, as I said, there is a very decent chance that we're going to see an eventual move higher above 70 in the USD Chinese yuan. I think nothing has changed having to do with that. And, because we had a friend asking the other day, there's still this potential in the USD ZAR of a head and shoulders formation, which hasn't triggered yet. So, the neckline and the level you should be watching is roughly at the 14 area. So, a break below there, especially if it happens rather quickly, so we don't lose so much the symmetry, is definitely going to be a very bearish event. Until that happens, that might just prove to be a consolidation and we might move higher. And that's why you shouldn't be, jumping the gun having to do with head and shoulders formation. Head and shoulders formation are head and shoulders formation only once they manage to break through the neckline, right? Otherwise, it's very easy to confuse a triangle for a head and shoulders formation. So, I just wanted to stress that out. Now, having to do with the Nikkei, I was very, very clear yesterday saying that, listen, the previous time that we were consolidating between 22,000 and 23,000, I was stressing out that the chances of breaking are very increased for that break to happen to the upside. And yesterday, when we were actually in the middle of this area, I said that, in my opinion, the exact opposite applies now. If we are to break this zone, when we break this zone, the chances are very increased that this time this zone is going to break to the downside. And as you see, we're currently actually probing the area between 22,000. And that's another indication that the USD yen trade might work out just nicely. So Nikkei on the precipice of breaking down, and one more thing I wanted to point out too, we seem to be having a very, very big reversal in the Shanghai Composite after breaking down below. I'm zooming out so you can see how key this horizontal support resistance area was. After breaking out below it and accelerating a little bit, we had like a huge bullish engulfing day on Friday. We had like a follow through yesterday. But as you see, so far, at least, this zone is acting as resistance again. So, that was a very big reversal day having to do with candlesticks. But don't jump the gun. We do need to clear this horizontal zone for us to be able to start discussing the possibility of a false breakdown that perhaps knocked out the rest of the bulls in this market. And the potential of a bigger rebound in the Shanghai Composite. Until that happens, I would be very careful because today perhaps we're just getting rejected from that zone once again, right? So, be a little bit patient with that. Needless to say, I made it very clear yesterday that after getting rejected in the DAX from 11,800, the path of least resistance remains lower because, very simply put, I was warning about this head and shoulders formation for months. We've now broken below it. Now we broke below the 11,500 area as well. So, God help whoever is long. I really don't see any big area of support until 10,800. Of course, if you go in a lower time frame, you can project other kinds of supports. For example, if we fib this last little bounce that we had. Let's fib this last bounce. We have a 161.8 at 11,115. We already probed the 141.4. So, you can always find areas of support like in the short term. But if you're talking, about having a look at the medium term, just look at this. There is a huge gap of air between 11,500 and 10,800. So, there is a very, very big chance that we're on our way there. right? And let's have a look at the FTSE. And I don't forget, somebody asked yesterday for the Nifty, so we're going to have a look at it. Yesterday specifically, when I talked about the FTSE, we were probing this 7,100 area of support resistance, and I said, be very careful. As we speak, the FTSE is testing resistance. So, we might get rejected from exactly here. And we did get rejected from exactly there. So next area of support, 6,847, 7,100 remains resistance, and obviously, keep looking lower until proven otherwise, until proven that something else is underway here. IWM, the Russell, let's have a look at that as well. And the Dow, because I had questions about those yesterday. Just look at the Russell. Russell breaking down below this channel. Just look how important this ascending channel has been. Russell breaking down below this channel, coming up, retesting. This is exactly what I drew when we broke down, actually, but it happened a lot faster than I expected. I mean, we rebounded within just a couple of days. We retested the channel. We got rejected from the channel again. Obviously, the Russell remains bearish. This move lower looks very impulsive. As long as we stay below 160 roughly, the path of resistance remains lower. And Nasdaq, when we broke below there, when we were actually trading here, I said, two chances when we were trading, when we were testing this resistance. One, we rebound towards the 61.8 roughly. Two, we break down from there. We almost did the first case scenario. I mean, we almost made it to the 61.8 and then lower. So we're at the then lower phase. I think that the 61.8% fib at 6,747 has a high chance of getting retested. And let's have a look at the Dow, because that was one of the questions I did manage to cover yesterday. Dow is holding up better than the rest of the indices. It has already retraced to the bottom of this wedge. It has retested the broken symmetrical triangle and remains above it. So I have to say that although it was underperforming the rest of the indices for quite a long period of time, it seems to be overperforming them quite recently. So the Dow looks somewhat better than the rest. Not that it looks bullish, but if you're looking to buy one of the US indices, perhaps you should be going for the Dow. Personally, I'm not looking to buy. I'm still in the mode to be selling rallies. And let's have a look at the Nifty that we had a question yesterday and then I can see if we have any questions for today. We haven't had a look at the Nifty in a long period of time. Let me just extend these lines that we had. If you see, I said that, the Nifty might be, we had examined it when we were somewhere up there. I said that, the Nifty can just be in a corrective move lower. But as you see, the Nifty accelerated. The fact that it rebounded and, got rejected from this zone again, because if you see, it opened higher, but never managed to, to close above this horizontal support resistance zone once again. That's a very bearish development. So, 9,951 is the next target, and then this 9,700. So, where resistance is. It seems to be following, risk in general. And, the fact that we saw an RSI reading of 20 is not a good sign either, because this is like a confirmed low. So, be careful. I don't think it's ready to be bought yet, right? It might have more downside here. The easy move, though, was that one we had discussed here, that long above the triangle. Now, after pushing, to new highs, the initial reaction to expect that the move lower is going to be corrective is the proper one. But, after you've seen such a move higher, because let's put things in perspective, right? Just look at this move of the Nifty. After you've seen this move higher, even a correction can be like a very deep correction, right? And a very complex correction. So, in my opinion, don't jump the gun. We need to see a lot more price action to confirm that any of these indices has actually completed a corrective cycle, and then we can be looking lower, there is always also the chance that we've actually formed some kind of a longer term tops in the vast majority of the indices, right? That chance should be considered still rather low. The fact that we're seeing a few days of bearish price action is not enough to invalidate, trends like this one. Just to put things in perspective, just look. This is the S&P. This is the S&P zoomed out. Now, if you see this pitchfork, I have this pitchfork for years on my chart. We're just back down in the midline of this pitchfork. So, is this uptrend like broken and completed or whatever and confirmed in any way? No, it isn't yet. But do we have, at least in the short term, some very big technical damage done to the index? Yes, we do. So no matter what happens, even if we rebound, I do believe that the index will spend more time, any of those indexes will spend more time consolidating or even pushing lower. So, we need to be more patient before we can, we can tell what this is. But I think that even if this is a correction, we can remain for at least several more days in sell the rally mode. Okay. There are questions about gold. You can see the recording because I already covered gold. Nifty, covered that as well. Okay, I think more or less I've covered all the questions. So let's see. First of all, Coach, do we have an interview today?
Yes, Steve, we do, and he's here anytime you want to wrap it. So, okay. Yeah, we have one.
And I shouldn't actually be asking this because that's why we made this page. We have an interview today, as it seems, right?
Yeah, Joseph is here.
With Joseph. Here he is. Yeah. Analyzing how macro policies impact markets, assessing how automation impacts businesses, competitiveness and technology, and technological unemployment. Sounds great. I'm looking forward to listening to your interview. So thank you all very much. I think
nice
we
page,
have some.
Man.
Thank you.
Nice work.
I think we have some interesting days ahead. And, if you remember, we were warning Dale that the boring days should be over soon. We were saying that a couple of weeks ago. And I think we're there, right?
Yeah, plenty of things to do, that's for sure. And the worm may have turned. I guess we needed the stock market to stop grinding up for all the action to unfold. So we're there. So
Yep.
make hay while the sun shines, Steve.
Yeah, exactly.
You made a few piles of hay. So
yeah.
Bring your horses to it and let them have dinner.
Yeah, this has been an excellent month.
Yeah, I wrote on Twitter, how hot we've been lately. We're usually pretty good, but really, really in tune. Anyone that listened to us, whether or not they had the gumption to short the market, at least I'm hopeful they heeded what we said and maybe lightened up in their 401k, or at least weren't caught long.
And since we have one more minute, let me also say that yesterday we had on YouTube, on Bloomberg, Joe, and he had another excellent interview. So you can go ahead and watch that if you go to our YouTube channel, because we don't have those yet. If you go to our YouTube channel you go to videos, because we don't have that in playlists yet, but we're going to make a playlist for that as well in the new page. This is the latest Bloomberg interview. It's just 4 minutes, so I will actually put the link here as well. In the chat box for people to watch it later. Previous time that Joe was on Bloomberg, 2nd of October, he correctly predicted what our views as ForexAnalytix were for a turn lower Joe has been magnificent. He's a natural on television, and most importantly, he's making the right calls, right? So enjoy the interview.
Okay, thank you, Steve. Hi, Joseph. I see you here. Looking forward to speaking to you. Thank you for taking time to talk to us about the Fed and how technology is going to replace all of us. I hope there's not going to be a robot to host and moderate webinars. Nice to meet you, Joseph. How are you? Waiting to hear your voice. Let's see. I think, see if you're unmuted. You are unmuted. So it's on the Dropbox to enable your audio.
Yeah, he's unmuted. You just need to make sure that you've selected from audio, you need to make sure that you've selected the proper source, because if you have, let's say, more than one microphones, like your camera's microphone or the headset or whatever, make sure you've selected the correct one, because we can't hear you yet.
It says I'm on mute. You're not on mute?
No, he's not on mute.
Yeah, but he wrote.
Perhaps you need to unmute yourself from the top left, but you're not muted from our side. From the side of the organizers, you're not unmuted. There's a little platform on the right-hand side. If the microphone is green...
Yes, you are unmuted. Okay, I see you playing with your volume. It's not helping. Okay. Sometimes I suggest people log out and come back in.
That's one suggestion. The other suggestion is that you can have voice over phone, actually. Go to webinar. When you connect, it gives you the ability to also connect via phone, having to do with voice. So you can do that as well.
Your call, Joseph. Because I see you unmuted from our side.
Let me fetch the phone number for him as well.
Can you text me the number?
Yeah, I can text you the number. So it's this is the number, coach.
Okay. Okay, you could hear me, right, Joseph? I mean, I could only text it to him here. I'll tell you what it is. 1-415-930-5321. 1-415-930-5321. You have a lot of people sticking around to hear you.
Yeah, and then it's going to ask him for a code. I can give him the code he can input.
Okay, and then your code is...
Let me give you, since we have to do it, vocally, let me give you the one that's going to start him as muted. So, and then we can unmute him. 555 784 689. So that's going to, that's going to connect him as muted, and then we can unmute him.
Okay. Got that?
Okay, I think we're good.
I see the phone. Hi, Joseph.
Yeah, so no, he's not connected yet. He's probably putting the number in.
I see.
But now he's connecting through phone, so he should be good. Once he puts in the code, let me write the code again for him. He will be good to go.
Thank you for your help, Steve.
My pleasure.
Hello, Joseph Jones is here.
Hi, Joseph.
Hey.
How are you?
Hey, we can hear you. Perfect.
All right, great. Sorry about all that. I'm not sure what happened. I downloaded the software and such, but
No
at any
problem.
rate,
We can both hear you and see your screen, so everything is perfect. Enjoy the interview.
Okay,
all right,
Joseph.
thank you.
So nice to meet you. Welcome to our community to Face. And I was wondering if you could tell us a little bit about your journey into the crazy science of economics and financial markets.
Yes, yeah, and thank you for having me on. I started my journey about 12 years ago or so. I was interested in economics in general, like how macroeconomic policy impacts markets and prices, like either from an end user perspective and such. And I went to grad school and graduated in 2011. And then I started realizing how the distortions, like how the monetary policy, I guess you'd say, impacts the markets, and sometimes in positive ways and other times negative ways. So I started studying through that, and then I became interested in looking at doing financial analysis and such, and started working as a data scientist and doing modeling, like different kind of economic modeling. When I was in Russia, I basically in 2015 I helped set up risk
the hacking operation for the 2016 presidential race.
No,
I'm kidding.
No, wasn't in any of that.
Okay.
But no, I was so I basically helped look for signals, like say if there's going to be a major ruble decline, like you're looking for signals in the market. And oddly enough, a lot of it just comes down to sentiment. How many times politicians have, I guess you would call, negative views towards the country, that would increase the rate of, say another round of sanctions and things of that nature. So
okay.
I went, yes. And then, so now I'm starting site doing helping individuals circumvent the upcoming technological, I guess you call it, revolution, and a number of levels, looking at from a business owners and from a end users perspective, and as well as, of course, a trader's perspective. So those are the main things. Yeah.
Okay. So I mean, we've already gone, the market. I've talked to some people that were interviewed in the old days, pre-high frequency trading, algos, just tape readers that were interviewed by Jack Schwager and Market Wizards, and they don't like the kind of markets we have right now being run by machines. So the markets are already there, aren't they, Joseph? As far as being run by machines?
Yes. Yeah. And the scary thing is now, I mean, of course, a lot of folks, they think that all the trading action happens down at Wall Street, when actually it doesn't, in northern New Jersey, for all those. Well, I mean, they have some at Wall Street still too, obviously, but a lot of the guys, they have these huge warehouses with these big servers that reside in northern New Jersey, doing all that high frequency trading and such.
Right. So the nature of investing has changed due to the technological age. You also wanted to talk a little bit about the Fed. Is that also part of your economic theory? And did you have any charts or anything that you wanted to show besides the Twitter page that you're showing?
Oops. Oh, I didn't know it was live on the screen here. I'm sorry.
That's okay.
Actually, I could show one. Let me one. This is just so I can just give you what I think is going to happen. As you probably well aware, as the Federal Reserve, they usually hike late in the business cycle, and what that happens is that basically they allow assets to rise or inflate to sizable amounts, and then of course, as they hike rates, and then you'll see a decline. So the one important
Isn't
thing
that
is
what
that
happened in 1937? The Fed made the same mistake.
yeah, but actually,
Go ahead.
yes, but the interesting thing is this isn't the first time the Fed's done this. Pretty much
Right.
with every major recession in the United States, or the Federal Reserve has followed the same exact pattern. They set interest rates too low in the early portion of the business cycle, and then they allow the asset prices to, I guess you'd say, rise kind of out of control, and then they quickly raise rates, and then it induces a recession, or in some cases a depression. And this has gone on over and over and over. So it's the same playbook. The theory from the Fed is they're trying to adhere to the neutral rate, but the reality is the Fed is very slow when it comes to front running risk. Because instead, they could have started raising rates even as early as mid 2012, like say third quarter 2012, even 10 basis points, which have been laughable at the time, but it would have stemmed some of the malinvestment and kept the markets going. I mean, they're still going now, but now obviously we're starting to see some rollover. That being said, the real yields is what's made a substantial move since December, moving from 50 basis points to 106 basis points. And this is important because this is seeing like flows into the dollar. And then now we're starting to see that funding rates like LIBOR has been rising quickly due to the supply of dollars drying up. And this has been in part impacted by the U.S. trade policy. And that really picked up in March, and it's going to continue. And the near term, we see the dollar reaching 98.5 by year end, and there's some pullbacks are possible because the Z scores right now are almost 2, and in that case, the support is likely to sit around 93.
Okay. Interesting. So I could show the dollar index. Okay.
Yeah, if you don't mind.
All right.
Yeah, let's take a look at actually I wanted to kind of allude more to have people understand just how important the interest rate. Oh yeah, this would be great.
Okay. So there's a dollar.
Go.
So you're defining eventually you're looking for 98.
98.5 by year end.
Okay, and here's your support level right at the 200-day moving average, 93.
Yeah.
So I'm thinking we could do this first. Is that what you're thinking? All right.
Yeah, that's fine.
Okay. All right. So you want me to show interest rates too while you're talking about them? I can show the
sure.
bond
I mean,
market.
I just wanted everyone to if they haven't taken the time to look at the historical trends of interest rates and kind of now how the Fed has less, I guess you'd say, leverage or less tools to work with during the next downturn. Whenever that crops up. I mean,
so this is what you're talking about, the increase of rates. Here the 10-year yield was under 140. So we've more than doubled. So it's 250%. And people are saying, I want your reaction, Joseph, that, it's still a low rate, but isn't it more important? Isn't it more important that they more than doubled? Because a lot of people made assumptions based on rates, on the 10-year under 2 or at 2 and not 320.
Yeah, no, and I agree with you. And the thing is, you got to look at the markets. The rates are low historically, but the markets are elevated, right? So to them, when it's doubling, that's a sizable increase. So from the market's perspective, that's a big jump. I mean, if you look at this chart for past 50 years, you're going to quickly see that during the reign of Volcker, you'll see that obviously it's very low.
Right.
But so from today's, the markets are very sizable, and the rates increase sizably for the 30-year.
Do you pay attention to the corporate debt market and with the tax cut that, a lot of corporations they've been able to borrow easily and cheap, and instead of investing in plant and equipment or new employees, they've been investing in financial engineering, paying out either share buybacks, so they're like leveraging their shares, or in dividends. Any opinion on the financial engineering, and
Well,
could that be part of this unwind that you're talking about that's coming?
yeah, and I think actually the corporate buybacks is actually just another signal for the bigger issues at play, and a lot of them that a lot of people aren't paying attention to. I mean, there's starting to be some talk on Twitter about it, but it's the pensions, the underfunded pension plans that in today's dollars are sitting around $4 trillion in terms of being underfunded, and that only exasperate once the downturn occurs. So that's a big deal, because obviously a lot of folks who are on the verge of retiring think, okay, I'm good now. I put in my 20 or 30 years, and then they come to realize that they're not going to get the pension that they're expecting.
They're already cutting back. Even the Teamsters have cut back the amounts that they're sending out to people. Is that correct?
Yes. And actually with that too, that also puts another kind of another face to this, that historically not a lot, but a sizable portion of the population would view who work in government as them being safe completely, but that's not the case. Because the reality is, if the government only has so much money in their pension, then they're going to work with what they have.
Okay, so even government hiring or layoffs are in the future. So why don't you talk about what everyone's freaked out about, being replaced by a robot and technology? I really don't think the robot from Lost in Space could host a webinar as well as I do. But
no, your job's safe, so you're good.
I'm safe?
Yeah.
Huh?
Yeah.
Oh, my God. It's the first time in my life I've heard I'm safe. All right.
No, but I mean, there's a human element to that, and that's to which, I mean, natural language processing is such as advanced, but it's not at human level.
Oh,
yet.
Okay.
But
I thought
but no,
none.
No, but the thing is what markets are going to be seeing now is they're going to be the big focus is one metric, or maybe two metrics, is the profit per employee. I mean, that's always been a notable figure, but now it's going to be really focused on, because now they're going to try to generate as much profit per employee, and they'll be able to do that doing what's called robotic process automation. And a lot of firms have software that help companies kind of induce this, like that do that basically help implement this program. And it's, I mean, at face level, it looks like, oh, that's fine. It gets rid of the boring jobs. But the reality is, and I could tell you this, working as a data scientist, they can automate data science jobs. Now, generally, a lot of data scientists would argue that, but I think a lot of it's just from an emotional perspective. But most of the roles in data science today is just finding ways as quickly as possible to automatically import data, ingest data, and then spit it out through the machine learning models. So it's all kind of working in that kind of sphere. And now robotics has even kind of started targeting dentistry, surgery. Now in the States, you're not seeing that so much, but if you look in China, they actually have those robotics in operation. I mean, they're not wide scale.
There's robotic surgery here in the U.S. Da Vinci is the name of the machine, I believe.
Yes. Yeah, I mean, they have some here, but not. I mean, it's kind of in its infancy. I mean, the technology is made here usually, or developed here, but like where it's more like wide scale. And I envision that's going to also be really popular too for a lot of governments that have state-run healthcare. I envision that, because that would be a cost saver for them.
Okay, everything's about saving money. So with all this displacement of people, Do you believe that governments are going to have to go to universal income and just pay people to breathe in and out because there's nowhere for
Pretty much. I mean,
And-
that's going to be down the road. I mean, the good news is there's still time. I guess you can call it time to change fields. And it's the reality is people are going to have to be willing to embrace the concept of continuous learning. Without continuous learning, that's where you're going to find yourself in a pickle. So the deal is you want to continuously learn new products, new technology, new processes, in order to circumvent technological unemployment for as long as you can. And also the thing is that a lot of folks aren't talking about, but it's not even automation of jobs is the scariest part, it's semi-automation. Why? Because semi-automation is easier to implement than that of full automation. It depends on the program and such, but in general, semi-automation, because that's where you only need to hire a couple employees that can do the work for, 15, 20 employees, depending on your work environment.
Okay. Well, then if this is the case, this going on, do you think that there'll still be free markets, and will there still be trading, or will there be all kinds of capital controls and the markets may not be there? Do you think they're going to, we're still going to be able to trade?
I hope so. I mean, the thing that I noticed was in 2008, because it used to be you only needed a few $100s or something to open an account, but now they raised that limit to, what was it, 5,000? I forgot what it's called. There's some legislation a few years back. I don't know if they might raise those rates again, kind of like a higher barrier to entry. I envision something like that occurring, especially with this, whenever this next, downturn occurs.
Do you think we're on the verge of this dystopia that you're talking about? Do you think we're on the verge of how much time? You said you have time to make adjustments. How much time do you think people have to make an adjustment if they think they're in a vulnerable position, financially and employment-wise?
See, that's a challenge, because now a lot of the markets are really dictated by intervention, whether it's from a government entity or central banking entity. So it's really tough. I envision, there's already been hints, at least in the States, for Trump inducing another tax cut. I don't know if it'll actually go through or not, but there might be little small things like that to give people another last wave of, optimism before it goes down. But to me, it's already looking like a downturn could happen as early as 2019 Q2. Again, it kind of depends on the policies, right? Because the infrastructure bills haven't even been introduced. Well, they've been introduced and some have passed, but the major ones, I think there's supposed to be, what is it, 1.1 trillion? Some absorbent, enormous number.
Can we get to our bailiwick? Do you take a look at currencies, and what do you foresee? Do you see the U.S. dollar losing its reserve currency status during this time?
Yeah, actually.
Go ahead.
I'm actually in the process of finishing up a Fed book. The tentative name is Fed Follies. And I actually write a whole chapter or two on a new international reserve currency.
Oh, an SDR? SDR
Mm-hmm.
by the IMF, that's based upon the size of the currency is based upon the country's GDP versus against debt or something?
I don't envision it being an SDR, because you have a thing called the Triffin's dilemma, and where basically those are holders of the federal international reserve currency. They basically have to be in perpetual debt because they have to ensure they meet the liquidity needs of the global market. And so what I envision it looking like is kind of, I guess you'd say, it's a little different than a lot of people's opinions, but I envision it being politically autonomous and electronic.
like a
meaning
like a
digital.
Bitcoin.
Yeah, something like that, except it won't be Bitcoin. But
Okay.
yeah, it'll be an electronic, and I envision it being administered by like a financial consortium, like say the IMF, and I envision it to be following the electronic scale, and it'll be scalable, and yeah, and so it'll be follow along the lines of, I envision it being an energy efficient blockchain, or like an energy efficient cryptocurrency, if you will.
Okay.
And the reason why is because
because of all the energy use that's needed to mine Bitcoin.
Yes, or cryptocurrencies in general.
Yeah.
Yes.
Okay.
So something that's going to be efficient, and it'll be administered by, say, an IMF, or probably be overlooked by the Bank of International Settlements. And then the way I
and cash
envision
is gone. Cash is gone.
Yes, cash is gone. I mean, that's already been a choice of people for a decade now or longer, you know.
Will the archaic relic gold and protect people during these times?
I think gold's an excellent vehicle for initial like crisis mode, but then once they actually introduce these different programs, and then then it won't be as helpful. But I think during the initial crisis mode, absolutely.
Okay.
Yes.
Silver too?
Yes, absolutely. Silver. Yeah. And silver's been undervalued for a long time.
Does technology eventually cause such an oil glut that oil's back under $20 a barrel and we're moving towards EVs, and fossil fuel really becomes a fossil?
That's a good question. I think the challenge that I don't haven't any direct research on is looking at how the oil companies, their financial load is. Like, how is it going to look during a financial crisis? Will they still be able to maintain their operations effectively? So I haven't looked at their debt load to basically be able to know that, at least in the immediate future.
Okay, well, Joseph, I noticed on your Twitter here, here you are, that you don't even have a link. So this is the only way really for people to get a hold of you, is they
they can get
economic hedge.
Yes, Twitter right now. The site that I also have is called doorway.ai, but it's not open. It's not ready yet. It should be ready by weekend, at least the preliminary setting of it.
Okay, and that's going to be some type of subscription model for you?
No. It's going to be more of a consultative approach. Like, basically, I'd help organizations deal with the upcoming changes in the economy and the changes of technology and how it impacts their businesses. Mm-hmm. And I'm also going to have another segment which will help individuals who are looking to circumvent technological unemployment as long as possible. I'll be providing tools for them to do that. Like, I've right now creating some modeling of the probability of your job being automated is this % and such.
Okay.
Yeah.
Okay.
So
well, Joseph.
Yeah.
I want to thank you for joining us today. It was fascinating.
Yeah. Thank you for having me on.
And uplifting for me that I'll still be able to jabber, and no one could replace a robot can't do what we do here at ForexAnalytix. That you still need the human element to communicate content to an audience.
Yes.
You're sure we're safe now?
Well, I guess it depends. See, that's going to come back to people's preference. I mean, if people really like robots, and that's say.
Yeah. Okay. So now I don't feel as safe as I did before, but
yeah,
I do feel enlightened by some of the things you talked about, and you have a great mission, because if there's ever going to be an adjustment, this is more than just a reversion to the mean in asset prices. This is a whole new world that we're looking at. So appreciate you coming on today, Joseph, and I wish you success in helping others make it through this.
Thank you.
All right, Joseph.
All right.
Thanks again. All right, everybody. Face, that's a wrap. Good hunting. See you in the chat room. If you need a new broker, contact Trent at Forest Park FX. And don't forget to join ForexAnalytix. They are the dream team. Adios, everyone. And most of all, don't just count your pips. I'm talking to you, Steve Volge. Count your blessings. And I'll see everyone tomorrow. Enjoy the rest of your day. Adios.